Welcome back, guys. So today I'm going to be talking with a close personal friend of mine, Harpreet Maan. He's the CEO of Blockline and one of the global blockchain experts and developers that is out there. He helps companies all over the world develop blockchain solutions specific to their business, as well as speaking at global conferences, amongst a million and one other things. Today, we're going to be talking about DeFi and how that's going to affect the world, as well as a number of other interesting things that are affecting, the global blockchain space. So I think this is actually going to be a really, really interesting one because the information is current. Also to note, I'm actually going to be releasing a video on comp tokens and the whole story about comp. So if you want to have a look at that when it drops, just make sure you subscribe. Otherwise, please enjoy. Thank you. All right, welcome. So today I've got Harpreet Maan from Blockline. So just to get kicked off, Harpreet, why don't you just tell us a little bit about yourself before we get stuck in?
Okay, thanks, Luke. Thanks for actually inviting me today to talk about, a bit about DeFi and a bit about myself. So my name is Harpreet Maan. I'm actually the CEO of Blockline Technologies Sdn Bhd. In short, we are known as Blockline. So Blockline is actually a blockchain development company. We focus a lot on building DLT solutions, distributed ledger technology solutions, as for the enterprise or for the crypto market. We also build a lot of support, support products for the crypto market as well. And we also do a lot of trainings and consultation. So, if you're looking for you're looking for developers training, you're looking for understanding what is the blockchain space all about, then maybe you should look us up.
Yeah, but I will give you one bit of kudos is that you are probably one of the more legitimate technologically advanced. You are one of the more legitimate tech guys in this space, especially around Southeast Asia. So I know that you speak all around Southeast Asia about all things blockchain, but mostly on the tech side. And then obviously you've got a fairly successful consulting and development business that backs up that credibility, as well as the training as well. So, don't sell yourself too short, but I think the most important message is to understand that Harpreet is one of the most, as far as I'm concerned in my travels around the world when it comes to crypto, one of the most legit guys when it comes to tech. And that's a pretty hard, it's a hard thing to find, I think, in this space, and I think you'd agree. But today we're talking about DeFi because it's the flavor of the month and everyone's going nuts about it. So how about, Harpreet, if you can just help me and just say, explain, give me the basics of what DeFi is and how it works and blah, 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 assuming that I'm a complete idiot and I know nothing.
Okay, so DeFi stands for Decentralized Finance. It is a new form of financial method where we actually can look into how we can bring a lot of our daily services. We talk about insurance, savings, loans into a more decentralized manner. When we talk about centralized, we talk about centrally governed. When we talk about decentralized, we talk about decentralized governed by communities, by people or stakeholders in that particular product. So if you talk about decentralized, a lot of people usually often refer to it as a technology that's something new and that's something that's enabled by blockchain. But if you really look into back in history, decentralized finance has been mainly the way we've been doing finance for thousands of years, which closely relate to how social financing work. Because if you really look back into social financing, is often between the person who has money and he wants to lend it out. It can be in his friends, in his community, or in a group of people who needs the form of credit. And there's usually sometimes there's usually committees, or they're usually decentralized committees in villages that usually governs a lot of this financial and asset management. So decentralized finance used to be the way we've been doing financing all the way before this. But we didn't have a way to actually do decentralized finance in the new technological era. How can we actually, one, govern this form of financing? And also, how can we actually, make sure that we are not being cheated, or the records are actually true. And a lot of this technologies was not really there. And post World War II, to speed up a lot of these financing activities to ensure trust in the nations that actually were being rebuilt, they decided to centralize everything. and focus everything on a common structure, financial structure, and kind of centralize everything and govern it through them. But if you look today again, the centralized structure has its own limitation. It actually helped us to grow quickly growing quickly our economy, establishing a lot of new financial sectors and a lot of new other services. But it actually never focused on one of the issues, which is like providing a good coverage of the finance or good coverage of the service. So if you see there's a huge number of people who are still underbanked, or and who do not have any sort of bank account, they are basically cut out from the financial services. And when blockchain came about, it actually kind of make people think again, should we like rethink finance? Should we actually like use this decentralized governance mechanism and also do decentralized finance, and bring in financial products like loans, credits, insurance to people who are unbanked, and also provide more efficient, frictionless way of doing financing? Because if you see a lot of trying to buying stocks, bonds, or getting any insurance has a lot of long processes, and usually it takes more time to actually go and getting these things approved and verified. But if you go in decentralized finance today, a lot of this thing is much quicker, much efficient. It's much easier for you to go in and buy any sort of crypto asset and actually trade it, make money, and exit it out. So it kind of made even finance more efficient, even for the products that already exist. So I think generally you can see this is how decentralized finance or DeFi brings value to the whole space.
So have you got some major examples? I mean, other than, whether they're existing projects or things that, I mean, how can you see DeFi impacting like people's lives in a few specific examples, in the next few years?
I think there is definitely, if you talk about starting from the unbanked, there's 1.7 billion people who are still unbanked, doesn't have a bank account. So these are the people who will be the most will be having the most impact, because they will be basically getting all sort of financial services now. And I think this is one of the ways we can do it. Number two is establishing trust. At the moment, it's really hard to give credit to a lot of people because of the like missing financial records and missing a lot of this and there's not easy or efficient ways to give financial services out there. Then I think what DeFi can help is actually bring in more transparency. So our current stock markets, a lot of our financial products are basically layered of multiple different products. If you talk about derivatives and everything else, and you often kind of lose visibility and like of the actual asset that you're really trading once you start going from derivative of derivatives, or like products that actually reflects the value of something that is really far in the end of the chain. And in this case, you really lose the sight of the value of the actual product. And often it is just in the end of speculation. I think this is what really happened in 2008. People didn't know if really somebody was paying back rents or not. So
yeah, well, so what you're saying is that basically an investor will get far closer to the asset that they would be investing in, whereas in the current model, obviously you've got layers of derivatives that will be trading either baskets of other derivatives, and you get this really complex structure that's been created by a lot of the finance market. Whereas what DeFi is going to enable people to invest in more direct assets.
Yeah, I think what it will be giving is the transparency for you to enable to like see if that actual asset, the underlying assets are actually still valuable, or actually they are performing as they are said to be, and they give you verifiability, so you can verify those assets if they even exist. So I think these two things are missing in our current financial structure, and I think blockchain can enable that, and at the same time reduce speculative assets and fraud in the market. So I think that is something that's really powerful to bring into the table.
So this is a question that I often ask and get asked is when we talk about banking the unbanked and bringing all these financial products to the unbanked. Now, the one question that hits my mind is that generally these people don't have a lot of money. That's why they're unbanked. And, for example, if you're a Gojek driver in Indonesia, some of these guys only have enough cash to fill their petrol tank for the morning. And then the money they earn continually feeds them and gives them more petrol. And then at the end of the day, they're back where they started. Now, guys like that don't need to be banked because they, cash-based society works for them. And I can imagine, without making vast assumptions, that a lot of people that fit into that 1.7 billion are living a similar lifestyle. Do people like that? I mean, what kind of financial product can these people generally benefit from? At the end of the day, I mean, it's not like they have free cash to invest. It's not like that insurance is really going to matter to them. And I mean, if they don't have free cash flow for these products, what's the point?
I mean, if you really look into it, among the reason, as you said, yes, a lot of the people who are unbanked are also usually one who doesn't have the infrastructure and also doesn't have the money that is actually valuable for our banking systems to actually go in, like to their places and provide them bank accounts, or even bother of providing them any sort of financial service.
Yeah, exactly.
So if you really see what blockchain does, is it actually brought the cost of building accounts really cheap and verifying those accounts. So today, even if you have one Bitcoin or one Satoshi, you still can have a Bitcoin account and you can still have it, like anywhere in the world. So the cost of owning that account has gone much cheaper. Maintaining and verifying the account got much cheaper. So in this case, we can actually provide even the Gojek driver in Indonesia a bank account based on like a blockchain system, which is the cost of having it is much cheaper. And if we can see that the person is having like a consistent earnings, maybe we can look into microcredits. Let's say if we need to loan some money to do some business, we can look into doing some microcredits. We don't want to take big risks, but we definitely want to take small risks and trying to basically provide them smaller credits. And over time, let's say if the person is capable, he's moving higher up the social ladder. So in this case, we can start providing them bigger and better credit systems and financial services.
So still, you're relying on those 1.7 people. You're really relying on those with the ambition to actually continually grow.
I mean, we definitely have to kind of move towards allowing people to have the social mobility, right? So in this case, let's say if they want to move up like the financial or the social ladder, they need to be given the opportunity. If today a lot of people don't even have banks, they have no chance of having any sort of credit being given to them except loan sharks. And and if you can go up and stake something, then maybe you can get out some loan out of people. But if these people who are unbanked right now, they want to do any sort of business, because if you have to see a lot of these people,
they have no opportunity to go out and get additional credit.
Yes.
All right, well that makes sense. So yes. I mean, it would, but I mean, for people who are, and that does make a lot more sense now, and that is probably not probably that is a good reason. However, for the more, I mean, how would it impact someone who, say, isn't in that extreme example, which is, let's say that people, the general people who are already banked, people who live in major cities like, myself in Sydney, you in Kuala Lumpur, people in Singapore, Jakarta, like people who live in these major cities that. How are they going to benefit from DeFi? How can I, in my daily life, how will I see my life improve?
I think one, as we see, as I shared earlier, the cost of doing finance itself is being reduced. So in this case, let's say if we can bring the cost of doing finance cheaper, can we actually provide better services, and can we provide cheaper financial alternatives and products to a lot of people? So let's say we can do cheaper insurance, where we can cover most of the most of the packages, or most of the insurance packages already, but cost of delivering, cost of selling, cost of verifying and everything is actually much cheaper. In this case,
you're taking a lot of the
premiums. Yeah,
you're deleting a lot of the bureaucracy, basically, is what the goal is.
You're deleting a lot of the bureaucracy, a lot of the middleman work, a lot of the people processes that are involved in between, and a lot of this, because it's automated. So the next insurance company might be just a startup, run by like maybe 20 to 50 people, and they might be able to service millions of people. Where now you have an insurance company that's usually like 20 floors, and they're basically just serving a small portion of the country.
And you'll need and one individual broker can only handle so many customers.
Yes.
Whereas if you automate the process, a lot of your, I guess, more cut and dry customers could just be automated.
Yes.
Which is an important point. I mean, I got a quote from an insurance broker for my car insurance recently. Mm-hmm. And the dude literally did nothing. He was just rolling over my policy from one year to another. And his fee for doing that, and I mean literally doing nothing, was $300 for literally just going, all right, this guy's policy's due. All right, we'll just go to the insurer for an automated quote. Boom, email it out to the client with an invoice for payment, and his fee was $300 for doing, I'd probably say, 5 minutes of work. So I can understand that.
So imagine that saving the $300 and putting all these features on an application, right? So whenever there's renewal, maybe you don't even have to think about it. It just actually gives you a recommendation telling that, hey, your insurance is about to expire. Do you want to renew the policy? And then you say yes, and you just sign it, and it just renews the policy for you. So
but also the other thing is it
yeah.
would probably even make the quotes cheaper. Like the actual quote for the insurance would be obviously, because the insurance company itself, not only the broker wouldn't be taking their cut, but then the insurance company themselves would obviously have a significantly they wouldn't be as fatty. They'd be a lot leaner.
Because now by reducing the cheaper, they get the power of scale, right? So in this case, if let's say they focused on mainly, like reducing the cost and actually providing service to more people. Although let's say it's like the subscription model, right? You, instead of trying to make, for one movie you make everybody pay $20, or you just give them a subscription fees, and subscription model, and let everybody to just subscribe and make it over the numbers. In this case, if you see, subscription model has been quite successful, especially in the new millennial and Gen Z market. I don't foresee the idea of a lot of the young people going out there trying to go and read these thick pieces of document and trying to get insurance. They definitely would like to get a much simpler way of getting the insurance, maybe via their mobile app and just processing it all out there. But how a lot of this, because when you start to go and more digitize, a lot of the processes in these insurance companies, as finance companies, are not yet digitized, right? And if they want to really become more efficient, one of the best ways is to adopt blockchain and automate most of these processes. And you can really cut down a lot of the costs, everything from auditing, accounts, management, like brokers, all of this. Basically, a lot of the costs will be brought down. In this case, you will be providing much more efficient, much more cheaper, and in this case, much more scalable financial services out there. And once one or two big banks started to do that, every other banks will be either they have to catch up, or they'll be out of the competition, because they will be too expensive and too slow for a lot of the market space to really wait for around. Yeah, because
that makes sense. Yeah. And so I'm just going to pause there because I've got to think of another question. What do you reckon we should talk about next? Because that was a pretty good summary, and it wasn't overly long about the DeFi space, about DeFi. We talked a lot about insurance. So I guess what I'll do, I think, what do you reckon? We can talk about, so we talked about insurance. We've talked about finance. Let's talk about DeFi projects. Okay, well, to move on from insurance, have you got any projects, and this isn't necessarily from a financial advice standpoint telling people to buy those projects, but have you got any projects that, for example, that you can see making an impact, or that are working on stuff that people should maybe look further into?
I mean, at the moment, if you see a lot of the DeFi projects, let me just open up the DeFi.
I'll let you do that, and I'll ask you the question again. Because the other thing I want to talk about is after that is we can talk about the bullshit part of it, like the hype cycle of the DeFi space, because I think that there probably is going to be a bit of that, where you're going to have projects that are like, yeah, we're DeFi, like, and then you're going to get maybe not like, ICE Long Island blockchain. But I think that I reckon there will be a mini DeFi bubble in the next few months. But we'll talk about that after we ask about the projects.
Because in the market, because there's a few types of projects in DeFi space right now, especially we look into the payment, we look into all these financial management products. There's DAOs, there's analytics products, there's prediction markets, there's staking. A lot of it's all money making and derivative market spaces, and also platforms for you to invest into funds currently, which are actually booming at the moment. Something like Aave, or we talk about Red BTC, Melon project.
Okay, so moving away from insurance, have you got any projects that you think have made good headway into delivering an outcome for the everyday human being in DeFi?
Okay, I'm actually been noticing some projects. I've been exploring some of them. There are some projects in DeFi, especially that enables payments much quicker, because there's always this notion behind blockchain being slow. So there's projects like Lightning Network that is really trying to have a game change in the whole payments network. area. There's something called Matix that is also doing a whole payment infrastructure, but on a much faster platform that is actually doing really well. Other than that, we also have like fund management platforms like the Melon protocol that I think is also doing good, but there's no financial advice here, of course. And there's also other projects that actually do lendings and borrowing platforms where you actually can go up and lend your cryptos and basically get some sort of interest rate. Because a lot of times we hold crypto and we just hold it on our accounts and we don't actually get, like we don't really grow the cryptos. So there's these new platforms that currently, I will say, a bit hyped and a bit, it's a bit picking up right now. And it's mostly the lending platforms like Aave, even exchange lending platforms as like I do use a lot of Binance lending, and I think even that is because it makes me much easier to just keep my money there whenever I'm trading some like alternate cryptos. I think even Binance lending is quite interesting.
Yeah, I remember even back in the day in 2017, I was using Bitfinex, despite the negative press they were getting. I was using the Bitfinex platform to lend out crypto. They were doing that back then. That's how they funded their margin. So if you wanted to trade at margin, you would have to have like it would be it was all, I mean, who knows, but it was allegedly all true trading volume, as in if someone was trading at margin, they would need to borrow that with an interest rate. They would have to borrow that margin crypto from another crypto user via the Bitfinex platform, which I thought was, at the time, I was like, that's brilliant. You know, neither here nor there on Bitfinex, but I remember they were doing that, which was quite interesting. So how would you be able to determine whether a fund or any of these DeFi products are legit versus like another BitConnect that's paying you an interest rate on your Bitcoin? I mean, obviously, other than the interest rate is insane, but how will you, I guess, how would people have at least a little bit of security knowing that when they're going to use this, you know, they're not going to end up on a YouTube promotional video talking about what's up? How do we get away from that?
I think a lot of it depends on the business model. If it, like, is it sensible? First of all, like often we can see a lot of people promising you stable returns or like guaranteed returns. These are the keywords that I usually run away from whenever they say that they're going to be getting this much of. If you give me your Bitcoin, I will be giving you this much of guaranteed returns every month. And I'm like, oh, okay. I'm not so sure about that. It's if there's even possible. And you need to see that. Like how are these platforms actually making money from your money? If let's say you're giving them money, how are they going to make it back? So when you look into like Aave or something, they usually lend it out on a higher percentage to lenders, and then usually they and whenever you put up your money, there you get a percentage from the interest that they give out to, and they also give and they give you and they cut a bit of the fees for themselves. So in this case, they always have a margin over the interest rate. On the asset that you actually put up there, and you'll get a part from the percentage. So in this case, if you see that model is working, you see the platform, like they have the people behind, does they have good reputation, or they're not sitting down in a lot of scam projects or scamming ICOs before, and then kind of build the trust. And overall, for me personally, honestly, how I evaluate a lot of these projects is how much of effort they really put up on the platform. If I see the platform is like quite shitty built, and like the UI and everything sucks, and I'm like, that's it. This is not for me. Although like how much of money people are claiming they are making, I'm not going to put up like my money up there. And at the same time, how much are really people like credible people? Are any credible people talking about them? Because if there's nobody credible in the market talking about them, or there's no any credible media covering them, I'm a bit less confident about putting my money there. Because
I'll be honest though, in the early days, a lot of credible people were talking about even BitConnect when that was a thing. So I mean, I know we talk about it, but it is still a thing. But no, I agree. I mean, I know that Aave, previously Etland, was a project I got in 2017. So I know that Etland is at least legit, and they've got a reasonable track record of building out a platform, and they're still around and still doing stuff. So I mean, they are one of the ones that have been quite good. And then I think the name change is probably a good idea as well. I mean, Etland is a bit specific, whereas Aave is a bit more, it's a bit more Cool. So moving on from some of those individual projects, I think the next thing we need to talk about is the bubble that may happen. I mean, do you see that there's a lot of hype around the DeFi space at the moment? Do you think we're going to see a bubble with a lot of Long Island iced tea DeFi kind of things coming up? People just using DeFi in their marketing to make it sound like they're doing something cool, and then disappearing once the pump happens.
I think that's definitely every time when there's a new technology or a new ecosystem really formulating, there's a lot of people who will jump in just for the sake of either leveraging on the branding to really grow their company, or on the other side try to go in and make a quick buck and run away. Often, so in this case, there's always, I think there will be a bubble, but I don't think it'll be as big as the ICO bubble. I think a lot of the current situation, like COVID and everything, is really toning down a lot of stuff. And because we usually learn from our mistakes, because we just had the ICO bubble and the crypto bubble, people are a bit more cautious now to put in their money. And I think that what has the ICO experience has taught a lot of people to now be careful on what you invest in, to learn more, to understand more what you're really dealing with, what kind of assets you're dealing with. And also regulation since then has also kind of matured. A lot of countries has regulated crypto or outright ban them, or they have actually chosen a side where which side of the conversation do they really want to play around. So in this case, I think this kind of really matured the discussion. But will the bubble exist? I believe it will, because once people start seeing there's billions and billions of dollars being locked in the crypto space, and a lot of people are making money, and you can quickly jump into it. So there will be a bubble potential, but I don't think it'll be as big as the ICO. And I think the market will go over it, because the bubble might be a good for the market in the beginning, because it will get a lot of people jumping in to adopt and use. But we have to just make sure that they jump into the right platforms and the right products, and that actually can sustain this whole new user group that is joining in. And I think DeFi, if you really look into it, the ecosystem is really formulating for the past few years. Although yes, now we start to really hear about it, but a lot of the tools and a lot of the DeFi discussions, the blogs, and the talk has been happening for past few years. And a lot of the tools and the comparing tools is already existing. We talk about something like DeFi Rate or DeFi blogs, and even I remember there was something called DeFi Prime that you actually can go up and read about a lot of this DeFi and projects that are out there, compare the platforms that exist, and decide which are the platforms you would want to use to invest your money, or to basically to decide what you want to do with your cryptos on this.
Well, I think, and how much regulatory oversight is there of these projects? Is it the same as any other crypto, or are we seeing do these projects have to jump through more hoops because they're dealing with a financial product?
At the moment, I would say that not a lot of regulatory oversight is existing on in this particular area. If we talk about DeFi. But some of the cryptos that are used, like we talk about Ethereum, we talk about like DAI or USDT. In certain countries, they are regulated. Like in Malaysia, we do accept the purchase of Ethereum, Bitcoin, and Ripple due to their market size, not because they like these particular coins, but because they were big in market size enough that the government decided, okay, maybe this something that we can try out and see how the market will perform once we let people to purchase this. So Ethereum falls under kind of a regulatory, regulated coin in Malaysia, in a way, where you actually can buy them from regulated exchanges. But we don't have DeFi regulation here in Malaysia, that if let's say you want to do lending and borrowing using cryptos, there's no rule on it. You want to do payment using cryptos, there's no rule on it yet. You want to do market making with crypto, there's no rule on it yet. So in this case, at the moment, what they like in Malaysia, what they do is that they notice that these are the areas that are really missing out on. So they enable the National Technology Innovation Sandbox, where a lot of these projects are really applying into, because there's some good number of Malaysian market making applications and some new lending platforms that are also being built. So they're jumping into this new sandbox to really try out. But overall, globally, DeFi has a very minimum oversight. Crypto exchanges and crypto purchasing, yes, But DeFi itself and DeFi products, no, very little oversight from the regulators.
Yeah. Well, I mean, but I guess, I mean, there would still be, I guess if you are even obviously in the States and other major jurisdictions, I mean, if you're running an ICO-backed project or you're running any kind of crypto project, there's still laws now in place to prosecute if you do something dodgy.
Yes.
So I guess if someone is, taking in a bunch of money and then, making it a Ponzi scheme under a DeFi banner, that there at least there is a certain degree of protection to stop people doing that. So I guess they're covered in that way. But I guess we will see regulation when it comes to this. And the biggest issue, I think, is going to be that potentially, and I know that, for example, in Australia, and I think Malaysia is similar, the banks, insurance companies, financial services companies employ so many people that would be made redundant by a technology that pretty much automates their job.
Yes, I think like not having the regulatory like oversight right now is actually benefiting a lot of the banks right now, because if not, somebody would have just gone up, built up a digital bank, try providing like decentralized financial services, and started to really compete with the banks on head to head. So I think this would be a good time for the banks to see onto all these technologies and all the disruptive technologies that are coming about, and look into retraining. If I know a lot of banks won't gonna do it from like the nature of banks and natures of human, you don't like to really spend a lot of this thing, but I think it will be a bit unethical if you really try to like do nothing until the last bit and then like just let go of people. I think it'll be good if we can start to do retraining and reassessment on how we actually can keeping employed a lot of the people in the industry, and how can we like maybe reallocate those resources into maybe new business models or new ideas or new concepts. But and looking towards past innovations and the way the past innovations came, often a lot of this institution first will reject, resist, and in the end, when they can't compete, they will blame it on the technology and let go of people, and then move on a downsized team and basically just run away from not doing any re-education or or any sort of providing any kind of benefits to their staff. So that is a risk of innovation, but it will have to happen because overall the value that is being created is much more than keeping the banks around in the current structure.
Yeah, that's good. And I guess as a leading question to that is, how can people benefit now? How can you or I benefit other than say becoming like you a blockchain developer or developing a project ourselves? I mean, how can we benefit as this trend rolls out, in your opinion?
I mean, I basically I tried to go in, explore, and see what are the new products and the new ways of doing things. I actually started to look a lot in how can I invest my crypto and how can I save my crypto out there. I started to use a lot of these lending marketplaces and start to give out my crypto and my savings on some parts of my savings on basically lending them out on a smaller interest rate. Because if you really see what are the percentage that we get from our bank for saving our money there, and the percentages that we get from a lot of these DeFi platforms is much higher. Some are like
what kind of returns are we talking?
Depending on crypto, there are some cryptos that can go 3 to 4%, some can go 5 to 6%, some are up to 18%. So depending on the cryptocurrency, and some of them are like if you go stable coins, I think you can go up to 8% as well in certain platforms. So 8% is way much more when like in today's standard, when we talk where a lot of countries are talking about negative interest rates, right?
Yeah.
So in this case, it kind of especially for countries that are facing negative interest rate, this is a way out for them to keep their money in a stable. Usually people still do it a lot in stable coins, but if you have any cryptocurrencies that you believe are going to gain in the future and you have trust in them, maybe you can even store in them as well, and they will have a different kind of way of interest structure.
Yeah. So, but I guess obviously those returns are obviously commensurate with a certain degree of risk.
Yes.
In that a lot of these, the stuff that we've already talked about today, the reason why you're getting 8% as opposed to 0 or negative is that you know that if you have your money with Maybank, chances are it's going to stay there. Now, you may end up losing, buying power due to adjusted inflation. However, the issue with DeFi is two things: is number one, the platform risk, as well as the volatility of the underlying asset risk. So you might be getting your 8% per annum, but the value of the underlying asset may quadruple or it may drop 99%. and the whole time it's stuck there in the platform and you can't do anything about it.
Yeah, that's the reason I do not advise everybody to go out and like pick up and start moving all their money into DeFi. That doesn't make sense. But it definitely, if you're looking into hedging and putting up certain percentage, maybe some small percentage, first learn first. Maybe you can try some small amounts, and once you build confidence and you know which are the tools that are good with you, which are the applications or like a products that you know that you're comfortable with, then you can use on them. And then there are many other things that you can use as well. Let's go for payments, go towards investment market spaces. There's auto financial, like auto trading systems. I would not want to name any names because I have been testing them, but I'm not confident with much of them. I'm mainly just trying with small money. And there's also staking platforms. You can stake some cryptos. And see them, because I have some cryptos that some staking cryptos that I was just keeping them on my wallets. And I said, hey, why don't I just stake them, right? And maybe I'll get more of that coins by just letting them sit there. And then there's like predictive markets and many other things that you actually can explore. But what I will recommend is, like, if you're trying to go into this market, take small calculated risk, trying and do a lot of your background research on who are the people behind them, and you're like, what is it really doing, and what is it going to do with your money if you put your money up there, and how are you going to make your profit? And often, a lot of times, people just think of, like the other day, I and my friends, I and Jason, if you know them, I and them actually were thinking about moving some money on a platform, and basically on our way to keep there to earn some interest. And we actually was thinking that, and I was thinking of moving my mana on there, and I look into the interest rate I'll be getting. It was really small, 1%. And I'm like, then I was thinking, it's okay, maybe I can move there. It's better than nothing. I'll move there. And I decided to pay the gas fees and move my mana there. And in the end, when I calculated, I actually paid more in my gas fees that I'm going to earn in the whole year.
Are you locked in? Like, is it like a term deposit when you put it in the thing, or is it annualized interest paid daily and you can just exit whenever?
They actually are flexible, and all they usually will go with flexible interest, so you can just leave it there and exit whenever you want. And then it's usually the savings models where you keep it, then you can lock it for 90 days. You'll get a certain percentage. But let's say you want to exit, they will usually they will give you two options: exit with that day's interest rate calculated in, or exit without the day's calculation. So in that case, they will just give you whatever you had made till then, and you can exit your coins. So they don't usually force keep it there. If you want to take it out, you can take it out.
Yeah.
Only thing is the interest rate will be need to be adjusted on the day. If let's say you want to lock in for 90 days, but you want to exit it on 30 days, you can do it. But it'll be calculated till the 29th day. The 30th day, you can decide if you want to get the last day's interest or not. Yeah.
Okay. Right. So yeah, they encourage you to do it, but if stuff's hitting the fan, you still have the opportunity to exit.
Yes, because you can't. It's not like fiat, right, where you just keep it and you can with confidence leave it there. Because if Bitcoin is going up and going down, and you might have the market, you were in confidence of leaving it there. But let's say if Bitcoin appreciates so much that you want to exit, or it depreciated in value that you feel not safe having it anymore, you would definitely want to exit it out, right? So that's the reason they always have the mechanism to remove your money.
Yeah, well, that's fair enough. Actually, that makes it at least reasonably appealing as something that would be tested out. Mm-hmm. And I think the last thing we wanted to talk about today was micropayments and how that is sort of affecting people. So, why don't you just give me a rundown on how that works?
So, I'm actually particularly very interested on this topic when you talk about micropayments, because us at Blockline, we're also exploring the idea, and we're actually even formulating a product towards this market space. So imagine today, right, when we talk about dollar or we talk about ringgit, we talk about until the 1 cent that we have in ringgit, or usually the smallest denominator now is 10 cents. We don't use 1 cent anymore. They're kind of we hardly even use them. So in this case, you can only spend around that amount of money. But when we look on the internet, we're talking about the economy of scale, right? When we're talking about multiple people trying to contribute small cents, and or maybe contributing a very small amount of money, but when you talk about millions of people doing it, you actually can make a lot of money out of it. That's how like a lot of Google ads, Facebook clicks, and a lot of other financial services are actually being powered on. Even like in Amazon, they actually charge you by time, and every time maybe you're charged by maybe like 2 or 3 cents or 4 cents. But a lot of these ecosystems previously was individual enterprise owned, and all the online services or financial payment services that were out there, they would not accept less than $1, right? So in this case, you can't do small amount of transactions because the cost of doing payments was expensive. Either you have to accumulate to a certain amount, then you can exit it, or usually you just can't do it. You have to price everything more than $1. So even let's say the thing is not worth $1, you have to price it above it, because if not, you can't do the payment. So this became a problem. But when you look into enabling micropayments, when we talk about bringing in more zeros in that particular currency. So let's say if I had 1 ringgit, but what if I can go 0.00001? So you'll be like, why would anybody want to do that? But now imagine of new concepts and new ideas.
Whoa.
Yeah.
You might want to say that. Why would anyone want to do that again? Just start that section about the ringgit.
Sure.
I'll go back. Oh, okay. Jesus, that was a big one.
You're fine, man?
Yeah, I'm good.
Okay.
Probably the cats.
So imagine the ringgit, but with multiple zeros at the back, right? So now a lot of people will be thinking, why would one like few micro cents? Why would one smaller denomination in my sense? But imagine new business model. Imagine having consumption-based payment. Today in the world, we are seeing there's so many things that we have to subscribe to. There's so many things that we really, out there that actually trying to grab our attention. But we actually dedicate a lot of our attention only on very specific things. On we go on Netflix, we don't watch everything on Netflix. We only watch certain Netflix movies, and maybe certain movies we want to watch on Netflix, certain shows we want to watch on Amazon Prime, or certain shows we want to watch on View. And in this case, I can't be subscribing 5-6 platforms just to watch the content I want, right? And there's originals and there's many other things. Then there's even songs that are currently being released on specific platforms. They exist on Spotify, or they exist on Ghana, or they exist on other platforms. So in this case, you can't actually have a full-on experience on basically moving around, in basically subscribing everything. A lot of people are kind of feeling a subscription overload as well, because after having your middle-class income and basically trying to survive in that with everything else, then you have a lot of these digital subscriptions that is going on. People can't really keep up, and often people will side towards going towards a lot of people who actually have the means, and a lot of people who actually understand how to do it. People tend to go more towards pirated product and just watch it pirated because they just want to watch the content, right? But what if we can do pay as you consume, right, models, and have an online infrastructure where people can actually do micropayments, small amount of payments, and do pay as they consume. So you can go up and jump into any video game, play it, you don't like it, stop playing it. And when you stop playing it, you stop paying for it. Jump into any movie, start watching it. If you don't like it, get out from it. Basically, you will stop paying. Same goes with music. Same goes with news articles. Same goes with blogs. So today we have a lot of newspapers, articles that would want you to keep on subscribing to many different versions to actually get the latest news. But you don't want to subscribe to everything. You just want to subscribe to a few news articles. And in this case, you have subscription overload even of getting your information, right? So I think this is something that will change user behavior, will change the way we consume online media, and at the same time might be a gateway towards IoT and the future technologies, because we might be paying as we consume, then we pay as subscriptions. I think subscription models will slowly have to be innovated. And how this technology is being enabled is like high throughput technologies that can do faster payment verifications, something like Lightning networks. You can see they can do really a high amount of transactions per second, and they can verify transactions in a very short time, better than any of the financial networks that we have out there. So in this case, I can do global payments. Let's say if sending money from here to Australia to you, look, in less than 3 seconds, verified and sent to you, right? So in this case, and plus the cost is maybe like few Satoshi, which is like not even few cents. So in this case, this kind of new platforms, new payment methods, new business models, new ideas will emerge just by micropayments.
Excellent. That sounds pretty cool. So, but I think we've had a bit of time now. So I'm going to wrap up this portion and say thank you. But then I'm just going to ask you one last question, which I'll put in a separate video. So we'll have to do 2 outros, but that's fine. The one question, the last question I want to ask you, which will be separate from the rest, is, and I only thought of it because you brought up the whole thing of the Satoshi, is how do you feel? How do you think the Bitcoin network itself will be able to survive once the mining subsidy gets tanked down to nothing? Because the amount of data that can fit in a block is still limited to 250 something transactions, and the fees that need to keep the network alive at the moment are about $50,000 per block. And if if the miners are still expecting the same amount of money to generate a block, it means that $50,000 will have to be split between the 250 odd transactions, which would make it completely unaffordable. So how can this network continue, and how can miners remain profitable in a time in 50 years when, or even actually a lot sooner than that, when the block reward gets diminished and diminished? So in, say, 12 years' time.
I think Bitcoin lacks, if you really ask me, the main layer is the Bitcoin itself, the technology. It's quite expensive to govern, and it's quite expensive to maintain. So and plus we can't do a lot of stuff on it. So in this case, people do not want to pay the high amount of transaction fees that are up there on the Bitcoin network. But I believe if we can build multi-layered solutions, like having Lightning networks to do payments, doing Lightning network smart contracts, doing dApps on them, because they are highly powerful, but later adding them up and securing them in Bitcoin, and like kind of still supporting the transactions on it, I think then they might actually, the overall transaction fees will drop. I think the number of miners might reduce, but the ecosystem might survive. I think currently among the reason why it's too expensive to both mine and actually to do transaction on it is because the competition is too much. There's too many people trying to compete to basically get a piece of the Bitcoin that actually being generated and the part of the fees. But if the network actually can exist on small number of miners and computers as well, so a lot of people will try to reduce, and there will form a part where the number of miners and the amount of mining activity and amount of mining power and fees that is required is optimal enough for the Bitcoin network to maintain itself. And then the second layer, third layer solutions will continue to add in more and more transaction to the Bitcoin network.
So is this things like Lightning Network and things like that, or?
I think there will be like Omni layers, Lightning networks, and many more other solutions that will be coming in. They'll be still feeding in transactions to Bitcoin network, but Bitcoin won't be a primary payment transaction network. They will be like a kind of a safe where you want to keep that information logged in forever, telling that this thing happened on a more secure platform, but you are using an alternative ecosystem to do transactions. It's like maybe like also we can talk about casino chips, right? You use casino chips to do faster trades and easier management on the casino when you're doing a lot of your trades. But when you want to cash out, you go back to the cashier and cash it out, and the cashier keeps all the cash in a vault. So the vault is Bitcoin, the Bitcoin network.
And then something like Lightning or whatever would be your chips that you'd be playing around with in real life.
Yes.
Oh, that is actually probably one of the best analogies I've heard about how Lightning relates to Lightning Network relates to Bitcoin. But I'll put that as a separate thing. Well, anyway, man, it's been about an hour, but this has actually been a really, really good chat. We have to do it again on something equally as interesting. But I've learned my lesson from doing 2-hour interviews, so I need to keep it at least an hour is enough for me to be able to mentally happen. But thanks for your time, man. And is there anything else, any other messages that you want to get out there to anyone who may be potentially watching?
I was only, I would like to end the note is basically invest responsibly. and don't lose your money. Try not to lose your money, at least, if you can.
Do your best.
Do your best.
Because you need that money. You need that money. The people who are taking it from you definitely don't. But oh, that's good, man. Well, look, we'll have a chat. I think next time we'll try to. I don't know how I'm going to be able to end this, but I think next time we'll hopefully be able to do a chat about. It would be good to maybe deep dive a bit more in the DeFi to talk about how people can actually make money out of it, other than investing in the projects. So we can have a bit more of a chat about that next time. But anyway, thanks for your time, man. It's been it's always a pleasure.